Transportation and warehousing company XPO Logistics posting a bigger than expected drop in earnings last night, but despite a decline in customer demand, it's remained open and is transporting goods during the pandemic. Joining us now is Brad Jacobs, Chairman and CEO of XPO Logistics. Brad, can you go back and just walk us through the chronology? I think a couple of months were pretty good, and then I guess March started maybe okay, and then was severely impacted. And then where are we right now on May 5th?
Good morning, Joe. So it started in China. We have most of our warehousing capability of our 800 warehouses and our 200 million square feet of warehousing space in Western Europe and in North America. But we have single-digit millions of square foot space in Asia. And we actually have some warehouse capacity in Wuhan, too. It really started in January for us in a small way. And then it started hitting Italy in the end of February, early March. And then it started hitting Spain and France right after that. And then and the UK came about a week after that. And then hit us middle of March. That's been the chronology of it.
And your operations are, I don't know how impacted they are, but everyone's safe. That's the first thing that you must have thought about, is everyone that continues to show up for work every day. You need to, that's priority number one.
That's priority number one, priority number two, and priority number three. The safety and health of our workers is the absolute focus that we've had the last couple of months. It's the most important thing we got going. And so we've been very, very concentrated on what we can do on hygiene, what we can do. How do you run a warehouse with people 6 feet apart? That was not no one's trained you for that when you get a degree in supply chain management. So we had to quickly improvise on that. How do you run a cross-dock facility at an LTL service center with people not coming into contact with each other? We had to get our arms all around the PPE. We had to get the wipe. It was quite a big venture, but the team rose to the occasion. And I'm very proud of the 100,000 strong employees around in 30 countries around the world that took each other's safety and health as seriously as their own.
Compared to the boom times that we were in, what are you? Where are you right now? Are you 60%, 70%? How would you characterize the operations at this point?
So in China, it's 95% back. In Europe, it's farther along than we are here in the United States. The recovery is not surprising, Joe, because it hit there a couple weeks before it hit here. So if you look at our LTL volumes, our less than truckload volumes, and you compare the last week in April versus the first week in April, if you go to France and you look at the number of pallets that are coming into the network, it's up, and it's up 26% in a 3-week period, which is very, very remarkable. It's a real sharp V. If you go over to Spain, it's up, and it's up 13% comparing the same to 1-week period. So it's also significantly up. If you go over to the UK, it's not up as much, but it's up. It's up about 4%. That's not a shock either, because it hit the UK about a week or two after it hit France and Spain. And if you look at, we run the largest transportation network in the perimeter of France, UK, and Spain. So a very, very good window on what's going on there. And it tanked. It went down dramatically when the whole shutdown took place and everyone went on furlough. And then in the last 4 weeks, it's come back dramatically, very fast, very furious. So it's very encouraging. We're also the largest provider of e-fulfillment for e-commerce in Western Europe. And there we have about 400 warehouses. And we saw the trough around April 14th. The reason I pick April 14th is because I look at the number of warehouses that our customers closed, that they took offline. And at the worst moment, April 14th, we had about 50 warehouses closed, 49 to be exact. Fast forward to today, we have about half of that closed, about 25. So again, you're seeing a nice increase. Now, come over to the United States, it's not the same story. In the United States, we've seen it come down sharply, and then it stabilized. So it's stabilized over the last few weeks, but it's not getting better. It's just stabilizing at the bottom. Well, let's see how that plays out over the next few weeks. It might get better.
You got $1 billion in cash. You got plenty of borrowing.
We have $2 billion in cash, Joe.
$2 billion?
Yes, we completed a high yield offering last week.
Okay, last week. That added to the $1 billion. And you've got other borrowings available, and a lot of your debt isn't due for over a decade. Some of it in 2022, but most of it later than that. So you're fine. You have no concerns, liquidity concern.
Zero. We're sitting on $2 billion of cash in the bank. We have another $500 million of liquidity with lines, mostly with European, French banks. We're going to generate hundreds of millions of dollars of positive free cash flow this year. If you look at the first quarter, which we're reporting later this morning, it was a real surprise the amount of free cash flow we had. So we were expecting to have something like negative $100 million of free cash flow, and we ended up reporting positive $100 million of free cash flow. So almost a $200 million swing in positive free cash flow. That's not surprising because the model is working. We always built the company so that when you go into a downturn, when you go into slowing, you can immediately push levers to throw off cash. And the biggest lever is throttling back CapEx. So when this hit us around March 13th, March 14th, we had an executive meeting, and our first decision was, let's do everything we can to enjoy the safety of our employees, then let's cut back the CapEx.